Shut up and sit down.
All right, everybody, welcome back to another episode of Rebel Trading Group. It's episode 51. It is Wednesday, my dudes. What is up? My name is Nathan Oliphant, and with me, as always, is the gluten-free Jason Bessing.
The gluten-free Jason Bessing. How are you doing today, Nathan?
Doing great.
It was a good day. It was finally a good day. We haven't had a healthy, beautiful day like this with the Dow rallying 617 points, S&P rallying 61 points, NASDAQ up 209 points. Woo! Gold even getting in on the action at $7 up on the ounce. Oil sliding off, another $1.22 selling at $50.34 a barrel. We're going to talk about that later.
Someone's going to buy it.
Bitcoin also having a day right at that right about 7:45 a.m. rocketed from 4,000 and has just been on a pop up ever since, and we are 6% on the day. That's been another wild ride. It's been a couple weeks since we've done this. We've been busy motherfuckers, but we're back at it.
Yeah,
episode
we
51.
had Thanksgiving break. Happy Thanksgiving.
Yeah, happy late holidays. I hope we can do a Christmas Eve. A Christmas Eve cast would be fun.
Maybe. I don't know.
I feel like we need to be in on the holidays. Anyway, the holiday time is upon us, and it's been a wild ride these past couple weeks. We've had just all kinds of shit just selling off, and it seems to be on the back of not very much. There hasn't been a lot of tweets or uncertainty. It's all just kind of been same old business as usual.
Yeah.
But that business as usual has just kind of been sliding off down. We had a decent earnings.
Even with today's rally, we're still reaching resistance levels on the downtrend.
Mm-hmm. Mm-hmm. This could correction. Be. Yeah. This. Remember, one day never solidifies anything. So just because we rallied today, we could sell off 600-700 points tomorrow and just keep going for the rest of the week. It's possible. We've seen it many of times. We've seen it. And what do they call that, Nathan?
Dead cat bounce.
There it is, the old dead cat bounce. Where we fall, and then we have that final nice rally. Everyone's buying into the momentum. Hey, Here we go. We're going back. Only to be smushed again, and it doesn't bounce back up. It's called a dead cat bounce.
But if it breaks past those resistance points, those are key indicators of reversals.
Mm-hmm. Mm-hmm. There's been a lot of interesting stuff going on, though. Because of these sell-offs, I'm thinking that we're starting to see a lot more potential. A lot of potential buying opportunities. A lot of things. A lot of dividend payers are starting to be more attractive. I've always seen the dividend, on average, dividends ranged from 1% to 3% when you and I kind of first got into the markets, and I'm starting to see a lot of 4, 5, 6s now. I'm starting to see some higher yields as the prices come down. Stocks are getting hit, but companies, not so much. Not so much. It's two different ball games, but if the company is still intact.
That's good to see, though.
Yeah, it's good to see. I've actually been acquiring a lot of things past couple weeks. Been building up the portfolio.
So you want to do some market news with Nate?
Yeah, we've been gone for a couple weeks. Why don't you kind of refresh us with everything going on?
Ooh, refresh?
Yeah, just to do a recap. Past month or so, man. I mean, we haven't done anything since November 5th.
Oh, what happened, dude? Okay, here's something. We got immigrants coming over the border, or asylum seekers. I'm sorry. I don't mean to offend anybody. Asylum seekers running over the border, and we're sending tear gas, apparently.
Oh, nice.
There's that. So there's that. I don't know if that has to do with the market, but whatever. Big thing happened today was the Fed chairman went ahead and said some notes today. And he said two kind of really important things, if I remember correctly. One of the most important things was that the rate hikes were reaching near neutral.
And that's right where they want it.
Yeah.
That sweet spot.
That's good. So, and then I think he also said that he's not afraid of an overvalued market. Or he doesn't think the market's overvalued.
Mm-hmm. Mm-hmm. I'm very curious. Do you think that Fed chairmen are barred from owning securities and treasuries and stuff like that in their own personal accounts? Like, do you think that they can manage that stuff? Do you think they have to have it managed by a third party? How do you think that works? Because there could be serious market manipulation with those Fed minutes and Fed meetings up in Wyoming. Nobody knows what goes on and what is said in those meetings because it's literally in a vault in a mountain.
Spooky.
So, like, do you think like in order to have some sort of transparency and fairness that some of these chairmen, I'm pretty sure we can find the answer out quickly, but I don't know. Do you think? What's your personal opinion? Jim Cramer himself can't own stock because of his position, so why should a Fed chairman? How can you come out and say that you don't believe the stock market is overvalued when you are the one person that controls the most important currency to have ever existed?
Enter Dylan Kissel.
We need to get him on the podcast.
That's exactly what I'm talking about.
We're going to do it. I'm going to pencil him in. You know what's funny? When we were talking about that 20 minutes ago, as you were saying his name, he had texted me.
Yeah, he's listening to us right now.
I think so. We're not even broadcasting live, but he's listening.
That's crazy.
He's listening. Hey, I just want to point it out real quick. Bitcoin, since we started this, has dropped 1%.
Woo! Buy, baby, buy.
So that's another market news that's kind of happened. Bitcoin broke through that ungodly support that I kept talking about.
Yes. It's in the 38s now.
Well, actually, no. We're at 40. We're at 42. Almost 43. We had a nice little rally today, but yeah, we hung out around the 35 to 38 range for about 2-3 days. And then we're rallying back up. And what's the cause of that? Do you happen to know the main cause of this? I heard that there's just unrest between the miners in the crypto space, and I heard that there's uncertainty with processing times is always a hot topic of discussion, and that's why the miners are somewhat in a battle, and the hard fork with Bitcoin Cash is going on. I don't know. This is a very complex asset, and it's very hard to keep up with the technology and how it works, and I am not a computer genius by any means. But I do have an underlying knowledge of what Bitcoin is, what it stands for, what it represents, how it works for the most part, and how I can send it to you as a cashless transaction. I understand those. So that being said, I think this is a good time to load up on a little bit more. Don't go all in. Don't go ham. But I think I'm keeping it between 2 and 3% at all times. So I'm doctoring that as needed, and I've kind of hit the sweet spot with the prices that we're at now. But I think this is a good time to get some of your favorite cryptos, some of the ones that are going to be around for a while. Maybe
What's
it's just
your favorite cryptocurrency?
Oh man, honestly, it's probably Litecoin.
Why?
Because I like that they took Bitcoin and they said, I recognize the flaws and everything that's going on with this, and I have a solution. And it's basically Bitcoin times 4. It's 4 times as fast. It's cheaper. As a trader, it's more volatile. It rallied, I think, like 9% today when Bitcoin rallied just over 6%. So it's a little bit more volatile. It moves faster. It's just, it's a little, I don't know. I like it. It's cute. It's a cute It's cute.
I think I skimmed past an article, and I thought I read something along, and maybe you can just entertain the idea, that they're trying to work on cryptocurrency to the point where it's not an investment vehicle, more of a actual currency to currency thing.
Mm-hmm. Well, in order to do that, they're definitely going to have to work on those transaction times. We've mentioned it before on the show, but Visa can do 30,000 transactions per second. Crypto, or Bitcoin, I'm sorry, not crypto, but Bitcoin specifically, can do 7 per second. And if you've got thousands of orders, I mean, I've heard of people out in California waiting 43 minutes for a cup of coffee transaction to go through. 43 minutes, dude. Coffee's cold by the time it's done. You already drank it. So that's got to be fixed. If that can be resolved, if you can have security with the crypto in the currency, and you can do faster processing times, I think you'll win. I absolutely think you'll win. So that's my little rant. Sorry I took that from you. I'm a goddamn rebel today. I like it here. Get a little bit more. Don't be greedy.
In other news, General Motors, I think, is laying off 14,000 jobs, or somewhere in the ballpark of 13 to 14,000 jobs.
I heard it was 15% of their workforce.
And Donald Trump got mad.
He said that they should pay back the bailout money. I think that's hilarious.
That's nice.
And he's kind of right. He said that they wouldn't be around if it wasn't for the American taxpayers and the federal government, and they're repaying them in a wrong way. He's right. He's absolutely right. I've never been a fan of General Motors. I actually had this discussion earlier at work. I'm not a fan of General Motors. I don't believe in their cars. I don't believe in their business models. I think they're very greedy with their asset buying. I don't think that they're run very well, and they've declared bankruptcy several times. I don't think it's a good company. I don't believe in their products. I don't like Chevrolet trucks. I'm a Ford man. Between the business and the product and the stock, I'm Ford all day. I think General Motors is a bunch of broke asses. Remember the Pontiacs and Saturns? Fucking Hummers.
R.I.P. Hummers.
Rip. Every now and then one comes through at work and I'm like, wow, it's time for you to let go, buddy. I actually asked someone, I said, do you think they'll ever... I asked someone one time, I was like, do you think they'll bring this back? And he said a company in China bought all the patents for Hummer. I don't know if that's true. That's just what he told me.
How do you just know that info?
I asked the guy. I mean, if he was a huge Hummer fan, giggity, I had to wait for it to come in. But I don't know. Not a GM fan. What else is going on?
Other news, just I think there's tariff talks coming up.
Always trade talks. But the G20 is meeting
loosening in trade talks. I'm paying attention to triple leverage funds around China. Might play some
yin and yang
around there.
Well,
juggle some options around there, if you may.
I'm about it.
Are you?
Oh yeah.
We should do some option strategies together sometime, man. It's fun.
Scary, man.
Yeah, dude, let's get it.
It's a throw of the die. Do you say dice or die?
It depends how I want to emphasize it.
Like if you're being a dick, you want to say die?
Yeah, it's just a roll of dice. So that's it. That was going to be a dick. Just a roll of dice.
Anything else really specifically going on? It's kind of, like I said, it's been business as usual. Earnings has slowed down. Earnings season is coming to the end. We're about to enter December in just a few days. We're going to have the Christmas, hopefully the Santa rally, quote unquote. Next thing you know, it'll be New Year's, and just after Martin Luther King Day, we're going to be right back at it, right back into earnings season. Kicking off Q1. Ooh.
Let's get it.
Well, it's Q4 earnings, but...
Yeah, it'll be Q4.
Q4, but it'll be the first earnings of the year. Hopefully we'll paint a nice picture of what's to come.
Do you think we can get to episode 100 by then?
Oh, man. By Martin Luther King Day? That's an easy 2 podcasts a day. Almost. Not even. It's like 1.13 a day.
We could try and crank some out. We'll see what happens.
Crank it out, baby.
Martin Luther King Day, episode 100. I love this podcast.
I like the idea of... never mind, we'll talk about it later.
Of what?
What, 420, 100 episode?
Wow. That could be. We could probably make that happen.
Yeah. We'll
That's
talk
around my
about it.
birthday. That might be the time we go to Vegas.
Live from the beautiful Luxor Resort Hotel and Casino, beautiful Las Vegas, Nevada.
If you don't wear a tux this time, I'm gonna be pissed.
I don't have a tux. I'll bring a suit.
Bring a suit, yeah. Don't be a jackass.
Don't tell me to bring a suit when I'm already in the car 3 hours from home.
I should have said rent a suit.
We're gonna do the old Harry and Lloyd from we're gonna do like the orange and the blue
Yeah.
tuxes.
Dumber and dumber.
I'm about it. That's such a great movie. I need to watch that soon. I feel like it's a good Christmas time movie. It has nothing to do with Christmas, but I feel like it's a good one. All right, well, let's go ahead and pop on over to market terminology.
Oh, yeah.
I have an easy one today. Easy, but important. Nathan, can you tell me a value stock?
Yeah. Isn't that a stock that has a relatively low PE ratio, kind of has it pays a kind of a dividend and can kind of have something behind it that proves it's got some value behind it.
That's a good way. I like that last way you put it. There's usually some strong brand power to a value stock. Like with Procter and Gamble, for example, is a perfect example of a value stock. Doesn't have a lot of growth potential. Sure, they can grow. They can buy some more companies, come out with new products, but they're not going to have 200% growth year over year. They're not going to be a Netflix or Google. And as a result of that, they tend to use extra cash to reward shareholders. A lot of consumer staple companies do these. Your big blue chips are like this. Some of my favorite personally would be something like Coca-Cola is a great value stock. A lot of utility companies are value stocks. Things that aren't going to run up on you. Things that aren't going to go to the moon. You're not going to buy it here at 40 and sell it at 60 in 2 weeks. It's not a semiconductor company. It's food, beverage, maybe even oil companies. I could say ExxonMobil would be more of a value company than a growth company.
Maybe not now, because I don't know.
It was probably a growth company throughout the 70s.
Yeah, it's definitely considered a value company. I would put it in that category.
But there's always a thin line, though. Because where do you put Microsoft? They pay a dividend. They have a lot of growth potential. It's a blue chip name. They're a Dow player. Are they a growth company?
You put them in the value plus growth portfolio offered by OB Capital, subsidiaries RTG.
Am I not right? You put them in the value plus growth because they have value and growth potential.
Yeah. I would say you could put them in a very weird basket like that if you'd like. Those kind of funds are definitely out there. There's mixed, Apple. Apple.
I've seen retirement portfolios like that.
I think another great example of that would be Target. Pay a little bit of a dividend. Not a huge one, but I think like a strong 2.3, something like that. Nothing monstrous. But I think that they have the opportunity to grow sales and compete with Amazon. So something like Target, your Microsoft, even Apple. Apple pays a good dividend. And they got a strong PE too. It's isn't like a whopping strong 19 or something like that.
It's relatively low.
It is relatively low. I think if you go back maybe 20, 30 episodes, I always said Apple has always kind of been strongly priced on everything, whether it's the technical.
They are not a $1 trillion company anymore.
No, Microsoft's actually about to pass them. Did you see that?
I didn't.
Microsoft is slowly growing as Apple has been slowly dipping. Interesting stuff.
Exciting.
Interesting stuff. But anyway, value stocks.
You want to buy some call options with me on Microsoft or some debit spreads?
I'm scared.
Dude, jump in. The water's fine.
Dude, she's at all-time highs.
What? No, she's not.
Dude, yeah, look at her. She's fucking beastly.
I mean, she's Microsoft, though. What are you going to do with her? Is she going to stop growing?
She's in a lot of baskets out there. She's actually in the crypto space, very little bit. She's in the gaming space, which I like. I think it actually is growing even more. We have gaming, crypto. They're in the cloud computing, business solutions,
Software
development. They lease their product out to millions of computers.
That 46 PE ratio, so much room to grow.
Yeah.
What is your fucking PE? I wish it was more.
It's a little highly priced. You know what's funny? I'm scrolling through Microsoft and I'm about to hit my history, and I know that I owned her at one point. I owned her at $50. Here we are. Here you are, Jason. May 8th, 2016.
Here we go.
Market sell. This was over 2 years ago. $50.42. I probably thought I was balling. I told you my story. When like stocks all clicked for me, and it was Microsoft. I owned Microsoft for I think a day. Like it was literally a day, maybe two. It was like $41. I sold it for $42. I thought I was big shit, right? I was just getting into the field. And then like 2 weeks later, I got a notification saying I had a pending dividend from Microsoft. I was like, what the fuck is that? And then I researched dividends and I said, whoa, wait. You mean to tell me if I just buy the stock and hold it, they're going to give me money? And sure as shit, we've been obsessed ever since that eureka moment.
Dude, Visa's up 4% today.
Visa's a beast, dude. She's one of my favorite stocks. She's definitely a growth stock. She is not a value stock. So let's wrap up that real quick. Value stocks. If you have any questions, comments, concerns, suggestions, insults, ideas, email us, rebeltradinggroup@gmail.com. We are on StockTwits, YouTube, SoundCloud, Facebook, coming soon to Apple. Coming soon.
Name drop.
So, that being said. That's the value stocks. We are value, and I consider myself a value investor. I don't touch a lot.
Are you right now a value investor right now? Be honest with me.
I got a little bit of a mix with my energy positions. With my energy position in CHK, that's definitely a growth play. They're a growth company. They are not value by any means. I see Nokia as that hybrid. As the growth potential and the value, because she pays a 3.5% dividend. It's a telecom play, but it's got some turnaround potential as they go through
What
this.
advantages do you have by saying it's a telecom play?
It's a telecom play because they're upgrading to 5G. They're leading the charge in Europe in 5G.
Are they?
Yeah.
What happens when Verizon comes in?
Verizon doesn't have the footprint that they do in their marketing space.
I don't know that.
It's a $36 billion company. It's bigger than Sprint.
$6 billion company. Pays it in.
I like it. I mean, I'm about it. It's been around for a while. I see it as opportunity. LYG specifically for the dividend and the dividend alone. I don't see any growth on that.
When's their next ex-div date?
I think March.
Damn, what the fuck?
I think it's March and September.
Did you get an ex-div date?
On September.
They pay it twice a year?
Yeah, they're twice a year. Most foreign companies, they don't operate on the quarterly thing. They're either annual or semi-annual. That's why Nokia has the single dividend. LYG has the two dividends. Nestle, I think does quarterly. I think I looked them up. But those foreign stocks, they don't typically operate quarterly like we do. Us Americans, we need to know what's going on at all times, whether it's our cell phones, our stock prices, our wealth, our bank account. Every quarter, we need to know what's going on. So let's move into today's topic. We got a fun one today. It's a fun one today. We're going to continue with our sector series. I think this is going to be 7. I could be wrong. I want to have to get that answer. But sector
excited.
series, we've talked about consumer staples. We've done energy. We've done industrials. We've done utilities. We've done consumer discretionary, one of my favorite. We've done real estate.
Industrials. Did you say that?
I did say.
Okay.
But thanks. You got my back. So today we're coming at you with, can I get a drum roll, Nathan? The financials sector.
Woo! XLF.
The ticker symbol XLF. The financial sector ETF. What's in there? Can we get some of the top holdings right off the bat? First of all, I don't need to explain financials are banks, right? And we're not talking about your local, go up here and you go get the ATM. We're talking Goldman Sachs. We're talking Morgan Stanley, Wells Fargo, JP Morgan. We're talking investment banks. We're talking
Bank of
global
America.
banks. You know, SEC has a floor
Wells
of
Fargo.
SEC has a floor of the Goldman Sachs building.
That's insane.
Isn't that beautiful? They have their own office right in there. We're talking the big, huge investment banks. And not just banks, but also a lot of insurance companies, reinsurance companies. People that insure insurance. That's reinsurance. Insuring your insurance.
Here's the two top
Hey,
holdings.
we are down 3%. Since we started this podcast, Bitcoin has gone down 3%.
Let's get it, dude. Let's buy some.
Well, I mean, I'd like it back in the 37. I'm going to buy more.
I wonder if I should sell my Litecoin. My Litecoin's up. Ooh, Bitcoin's down? Yeah, it's coming down. I'll go back up. It's still trending up. Still trending up?
So let's talk about XLF Financial's top holdings. Right off the bat.
I don't even need to tell you. I don't even need to look it up, but it's Berkshire Hathaway and JP Morgan Chase.
Mm-hmm. Those are the top two right there. And those two alone are 24.69% of the portfolio.
It's insane.
Now, let's go ahead and start with that first one before we go to the rest. Because like I said it earlier, Bank of America, Wells Fargo are next, so on and so forth. We all know who the big banks are. Berkshire Hathaway, top holding. I want to debate that for a quick second. Once again, I talked about this earlier at work. Why is Berkshire Hathaway the top holding in XLF? I have my theory, but do you have any idea, any theory as to why?
I have no idea.
I think it's because they're heavily levered in the insurance industry.
In Geico?
They have Geico, and they dabble in a lot of other banks. If you can give me just a quick second, I'm going to pull up Berkshire Hathaway Holdings. And
I know the top one's Apple.
Yeah, well now it is, but Coca-Cola as well. But I'm very curious as to why. I mean, they own a lot of Wells Fargo. They own a lot of American Express. They own a lot of a Bank of America. They own a lot of a U.S. Bancorp. So maybe it's just kind of, I don't know. It's weird because Berkshire is its own fucking index, dude. It's like it's its own thing. Coca-Cola. Okay. They own Moody's. I'm just going for financials. Yeah, let me see if I can. Oh, that was just his top 10. Damn it. Sorry. But anyway, I'm going to wrap that up. Yeah, I think it's because they are so heavily levered and, I mean, not levered, but allocated to the insurance sector. When he took over Berkshire Hathaway in the 70s, it was a textile company. And in order to take it over, he fucking bought all the shares aggressively and fought the board of directors. Took it over, stopped textiles, and turned it into an insurance company. Used the insurance premiums to invest. And that, like, bingo. It's been butter ever since. So, anyway, let's push that to the side. Let's go to the next holdings. We got JP Morgan.
Oh, the top.
And speaking of which, Berkshire Hathaway and Warren Buffett himself have been buying a lot of JP Morgan. I'm not sure if you've heard about that.
Yeah, I did.
This sector's been struggling this month, man. We got J.P. Morgan
cool.
next, Bank of America, Wells Fargo, Citi, U.S. Bancorp, Goldman Sachs, American Express, Morgan Stanley, CME. That's a good one to have in there. The Chicago Mercantile Exchange. They're not a bank at all. They're not insurance either. They're the fucking futures market.
Yep, exchanges.
Exchanges are in there?
The New York Stock Exchange is in there, too.
Oh, I bet. ICE? ICE?
Yeah.
Oh, we did healthcare, too, didn't we? That's the
Yeah.
one we forgot. There it is. So, that being said, what do you think?
Dude, I like it. Okay, because you got to think it's the U.S. financials. It's not just like all financials. It's not global financials. It's the U.S. financials. It's the largest financials.
Yeah.
You have to think of we're in a rising interest rate environment, and that always works out for banks because the money that is loaned out from the government, that's what the interest rates are. That's what has to be returned on interest.
Mm-hmm.
And that money goes through the banks and down to the consumer. And so the way banks make money is through those interest rates. So when those go up, they make more money.
It's a very simple business model. I make money. I loan it to you at 1% every year. You loan it for 3% every year. That person loans it for 7% a year, so on and so forth. And it's just very simple because it's weird. It's not necessarily a product. It's weird. It's a very unique sector because they don't provide anything except financial services, investment solutions, banking solutions, loan products, shit like that. Very boring things to a lot of people. Mortgages. But I fucking nut to this stuff. Because if you're on the right side of loaning money, you will be rich. The Lloyd's Banking Group, when I called Invest Talk, shout out, he reported that because my big plug on them was that they are a bank in England and it's got 83% insider ownership. Of course, meaning, for those of you who don't know, that means that the people who work for the company, the officers, the board of directors, the CEO, the CFO, the vice president, the chairmen, all of them, they own 83% of the company. And for me, that's a very comfortable thing because that means that they've got skin in the game. They have everything in their own interest to make sure that bank makes a lot of fucking money. Because if not, there goes all their billions and wealth and all that. That being said, if you're on, and I'm saying this because I said if you're on the right end of the loaning side, in England, families and wealthy people were the underwriters for almost every single loan through a bank. So the Lloyd's family is the one that created this banking system, and they literally wrote the checks for people to go buy their house or go buy their stuff. And in return, through a bank, they accumulated all the interest payments and all the premiums and all the fees and all that shit. So going back to that, if you're on the right side of a loan, you'll make a lot of money. And that's why I like banks.
If you're on the right side of the loan.
If you're on the right side of the loan, dude. I mean, too many people have 16, 17% interest rates on their credit card, and they got them maxed out in America, dude. And every month they're just treading water, and they're just paying that $160 in interest before they even cut into their principal. They're just treading, keeping their head above water, and they're just paying off these banks. And these banks have all kinds of different products out there. They have, as they loan to different industries. They loan to some other banks, first of all. Big banks will loan to smaller regional banks. Central banks will loan to other central banks. They have hands in the housing market through real estate, mortgages.
Oh, yeah.
That's a big one. That's a very big one. That was actually
banks were the attention of the 2008 housing crisis.
Yeah, they're the reason that it was collapsed through creating investment products leveraged around housing. They have hands in credit card. They have auto loans. There's just so many different types of loans that it's almost like investing in stocks, but through debt. You get what I'm saying?
Mm-hmm.
So like they have debt products in different markets, and these companies specifically within this fund have their hands in pots all around the globe. I mean, I said cunt before I said the re part, and I stopped. You hear that? They have it all around the cunt, and I like the diversity.
Let me put out a phrase for you, and then we can kind of go into that a little bit. How do you feel about the phrase "too big to fail"?
That's one of my favorite things about the financial sector. Actually, is I said it earlier when I was talking to you when we weren't live. I hate banks, and personally, one of the reasons why I like that we're the rebels is because every dollar I make is one a bank doesn't. Every dividend I get paid, Goldman Sachs trader did not make. You know what I'm saying? So that being said, I hate banks because they're so corrupt and they're greedy and they fuck over American people and they push this consumer lifestyle and they loan and loan and loan and these student loan debts that they drive up and all this shit. But at the end of the day, almost all their products are insured by the U.S. government, and that is what makes them too big to fail. The FDIC insurance, the SIPC insurance, the Equal Opportunity Housing fucking acts, all that shit. So when they loan out money, it's usually backed, both on their end and the consumer's end, by the government. Yeah. So I like investing in that corruption. I know that's a...
Okay, so how do you feel with cryptocurrencies becoming more and more of a thing, becoming more and more popular? How do you think they fit in with the financials?
If you go back on Netflix and you watch Banking on Bitcoin was launched days into the recession. Literally days into the... Bitcoin was basically launched days into the recession, and because of that, and that was because of the financial crisis that the banks were imposing and taking bets on other people's money and putting people's retirement accounts at stake, so on, so forth. Putting people's homes at stake, and so on and so forth. And cryptocurrency, you kind of have to, in order to understand crypto, I tell people you have to understand how the Federal Reserve works. So let's very easily and unbiasedly, if that's a word, jump into a very quick explanation of how the Federal Reserve works. The Federal Reserve is a private institution, not government entity, that prints the money supply. If you look at a $20 bill, a $10 bill, dollar bill, $5 bill, whatever, it's not a dollar bill. It doesn't say U.S. dollar on it. It says Federal Reserve Note.
Nope.
And what that is, basically the way a central bank works, or the Federal Reserve, is, Nathan, I have $1, and I'm going to loan it to you, okay? You have to pay me back $1.25 now. Can't do it, right? It's impossible. I only gave you $1. That's the only money in existence, right? That's the dollar I created. I gave it to you. You now owe it to me. You are the U.S. Treasury, all right?
Okay.
So you need to pay me back that loan, so I might as well go ahead and print you some more money. So now I'm going to give you $2. So I've given you $3 total, but you only owe me $1.25. So you pay that back. Now you owe me $2.50. So on and so forth. So you keep taking loans to pay off your perpetual debt. And that's how our Federal Reserve System works. They loan the money to JP Morgan and Goldman Sachs and Wells Fargo, Bank of America, Citi. They loan it to them at the federal funds rate. Let's say it's 2% interest. That the bank will then loan it at 4%, 7%. That's where the bank gets their money. It's called helicopter money.
Helicopter money.
Helicopter
Do they buy helicopters with it?
No, it's because they've just open a helicopter and they just drop it into all these banks. Here you go, guys. Here's the money. So, as a result of that's why our $1 trillion debt only gets bigger and bigger, faster and faster. 20 trillion is the last I heard. I wouldn't be surprised if it's 26 by the end of next year. It just keeps growing and growing. So through that perpetual debt, we pay it off. We pay off the interest on the bonds that the Treasury buys from the Federal Reserve. We pay the interest on it through the IRS and taxes.
Yeah.
Federal income taxes are the reason that is basically to pay off the national debt.
There's also corporate taxes as well.
Oh yeah, there's tons of taxes. There's tons of fucking taxes. But going back to the whole crypto thing, the idea to launch crypto was to decentralize that money. Not have to pay taxes on a currency that is bullshit anyway, that is printed out of thin air and loaned to big banks and CEOs so they can buy more Lamborghinis, stuff like that. So at the end of the day, I'm a huge fan of crypto because of what it represents, the decentralization of currency. However, I don't think that it poses a threat to any financial institution until Bitcoin gains more legitimacy. Until it's more accepted, whether you can go to Starbucks and you can go to Walmart. These big American names accept currencies, cryptocurrencies. And until that happens, there's no reason for crypto to really be around. I mean, it's more of an asset. It's more of a digital asset, maybe something like gold to people.
I feel like Bitcoin became something that people didn't want it to be.
I feel like it was launched for a good reason. It just hasn't landed.
Yeah.
And I swear to God, the way that they launched it right at the recession happening, that shit, they thought that was going to be the end-all, be-all. This is what's going to seal off those greedy banks and the greedy Federal Reserve and the income tax, and this is how it's going to be fair. So that's why I like cryptos. What do you think? Do you think it poses a threat to the financial sector at all?
I think the blockchain has lots of utilities to it.
I like the blockchain technology. That's something I completely forgot to talk about. Good job, Nathan.
Yeah, I think it has lots of utilities, especially in banking as well.
Mm-hmm. Keeps track of transactions, ledgers, and safely, securely.
I think if you can get on a blockchain kind of network, any kind of way is a good step into actual integration of cryptocurrencies.
A lot of blue chip tech companies are getting into blockchain in some way, shape, or form, even if it's not crypto.
About Overstock?
No. Well, they accept Bitcoin as payment, but I'm talking about...
No, Overstock is selling off its retail division to focus on blockchain technologies.
What?
You didn't hear about that? I should have put that in market news.
No, that's interesting. Tell me more.
That's all I know. Like, they're just having this revelation or some kind of fucking epiphany that they believe in the blockchain. And honestly, I just think it's too early, and I think it's kind of a foolish decision for Overstock.
Unless they see something other people aren't. And it's weird. It's different. We've never had anything like it, and it's in its infancy stages. I mean, hell, it might even still be a fetus, you know?
Or it's just a tulip.
There's some flaws to it. There is some flaw, but there's flaws in our banking system.
Yeah.
And there's flaws in our financial sectors and the way that we have to pay health insurance and so on and so forth. There's flaws in everything. I think that this is a great solution because it decentralizes the currency. One single entity cannot be in charge of the welfare of the owners of their currency. Bitcoin is run by open source free market.
What happens when it becomes all cryptocurrency, no cash? What happens to the price of an actual cryptocurrency?
Well, would you be surprised if they converted some sort of U.S. dollar into cryptocurrency?
The Tether.
Well, Tether is linked to the dollar, quote unquote, in the sense that the prices fluctuate the same. but I don't think it actually represents $1.
I don't really get Tether. I don't know like why you're trying to get away from that. So like I don't get it.
Our point is to get away from a decentralized currency. So why link an asset to a centralized currency? It's dumb. That's why it's what a dollar a coin.
Yes.
Whatever. Someone just trying to people just trying to get rich on ICOs, man. So let's go back to the financial sector. How is it being held in your account? How is it being held in your life? How is it being, like, is it part of your portfolio, retirement, or do you trade it? What's going on?
Until, I don't know. Long as fuck financials, man.
I'm long on it as well. I made the mistake a while ago in a different account to buy an XLF 30 call end of year, and I bought that at the beginning of last year.
Oh, you're gonna sit on that for a year?
Well, I bought it at the beginning of the year, and we had a very flat year. We were at around the 26 range when I purchased it. So, I mean, yeah, fuck me, right? What are we gonna do? But financials had a rough year. They had a rough
Everybody kind of had a rough ending of the year.
That's true, but if you pull up the financial chart compared to the S&P, there's just not a lot of upward movement.
Yeah,
there's not at all. We're up 4% for the year, and to be honest, that's 2 days of trading.
Hey, which of the companies? I know the answer. Which companies are in the Dow Jones?
Ooh, well, right off the bat, I know Visa, MasterCard, and American Express are all Dow players.
Yeah.
Goldman Sachs, JP Morgan,
right?
Bank of America.
Right. Bank of America is not in the Dow.
Really?
Yeah.
Are you kidding me?
I think so. I'm gonna double check because I don't want to.
I'm almost positive Citi's in there though.
Citibank.
It's hard. Isn't it hard to keep up with 30 stocks?
Yeah.
It's weird. Like I can keep up with my portfolio, but 30 stocks? Huh. I'm trying to pull up. I actually have a link to a Dow Jones tracker. I have it saved. I call it the Dow Watch on Market Watch, and it just pulls up the index, tells you the top performers and the least performers within the Dow on the day. So let me pull them up real quick. All right, so we got Visa in there. They're financial. American Express, Goldman Sachs, JP Morgan Chase, Travelers Co. They're insurance, right?
Are they?
Travelers Co. I'm pretty sure. TRV is the symbol. Average revenue per employee is $972,000. What? I don't know who this company is, to be honest. Anyway, I don't know if they're insurance or what. I'm going to call them insurance. They're insurance. And that's it. Yeah, we called them all. So,
yes, casualty insurance products.
Okay, yeah, there we go. Yeah, so insurance company. So we got it all. Speaking of which, going back to the market news real quick, did you see United Technologies, UTX, is splitting into 3 separate companies?
Yeah.
Are they going to be 3 separate publicly traded companies?
You think they're going to be like holdings like GE?
Maybe, or just have different divisions? Or are they splitting into are they no longer going to be UTX and I don't know.
So they might. I wonder if they're gonna. I don't know. I don't know anything, but I'm just wondering maybe they're gonna do a United Technologies finance.
They'd be a defense, automotive, and technology sector. Operates in the following divisions.
Yeah. I don't know. Or maybe they're doing 3 IPOs. Can they do that? I don't know. What the fuck?
I mean, I'm sure it's been done, dude. When Yum split off into Yum China, I mean, they had an IPO.
That's cool.
So you said you're holding. So XLF is long term for you. It's something that is
Yeah,
it something you
I'd get a
would
bunch of
like?
it. I like it because you get like a piece of Berkshire Hathaway, and for like cheaper than like even Berkshire Hathaway B shares.
Berkshire Hathaway's fucking expensive.
Yeah, even like the B shares are getting expensive.
Yeah. Yeah. They did that one split. It was 50-1. And Warren Buffett, I don't know if a lot of people know this, but he is against dividends. He's against paying dividends. He's about getting them. He's against paying them. He's also against splits. The only reason that he allowed a split the last time is because so many people demanded it. And he said it doesn't create wealth, blah, 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 blah. And he thought it was stupid, but he said whatever. It's funny. I don't know exactly when it was, but he said when he started Berkshire, he says that they will never pay a dividend because he believes that he can use the dividend money better than the shareholder can, pretty much.
Or like, he can use it in better ways.
Yeah, he can use
it. Get more growth.
Exactly. But apparently they paid a one-time dividend. And when he was asked about it, he said, I must have been in the bathroom. I love that guy. I love that guy. He's going to be sad when he dies. He's old as fuck. Nathan, my office one day is going to have a nice big portrait of Warren Buffett.
WB?
Maybe, and he's going to have like a big 14-inch dong as well.
Wow. What if he has a really tiny wiener?
Doesn't matter. You got more money than God. I like that you say that it has exposure to Berkshire. One thing I like about sector funds and index funds together, or as a whole, giggity, is because it has the opportunity to give you exposure to some things that you may not want to own per se, but things you might want exposure to. Just like Berkshire, like you said, it's like I think right now about $215 a share. Like that's expensive. Like that's a monthly deposit for me sometimes. And $200 for one single share. But by buying XLF, you get exposure to that, and then exposure to some global banking operations, and I like the impact that it can have. The thing I don't like about XLF, though, I wish these banks paid bigger dividends. I feel like they've got so much cash flow, or they should have higher cash flows because of the amount of money that they loan out. They should reward shareholders a little bit better. Can you agree with me? Like, these companies are huge, but the dividend yield on XLF is, I think, sub 1%.
What do you buy financials for?
Financials are best as... It's hard to say, man. It's because they're so cyclical. They're so cyclical. In a recession, I think some of the banks will get hit the hardest, especially if defaults go up on loan products. Yeah. Banks, in my opinion, are going to get hit as hard as technology.
What do you think about this as a strategy? And I don't know if financial services are in finance, but what do you think about financial service companies during a recession?
During a recession?
Post-recession?
It's fucking hard because the last recession, it's hard to say because the last recession was caused because of a financial crisis. And the financial sector is what caused that. It wasn't the consumer discretionary sector, So that being said, it's hard to say like how will they act in the next recession because the last one they got hit so hard because they were also levered to housing.
If somebody says we're in a recession, is it too late to buy puts?
Yes. You missed it. You missed it.
I loved it.
And I hate to say it because you would think like, oh, it can just keep going. But once you've had that violent move, probably most of your money's been made. You don't chase performance. That's not what we do here at the Rebel Trading Group. We accept when we missed something and we hope that we can catch it the next time.
Buy some calls.
You
Time to
buy
buy some
calls. Earlier today, I did it once a couple weeks ago, and you did it today on TQQQ. I did it on ODP. QQQQ rallied. You locked in significant profits. Congratulations. And then you instantly looked at shorting it because you don't think that rally was necessarily warranted. And that's what I like about our methodology. Like, we know when things rally too hard and things drop too fast. So as traders and rebels, god damn it, we've got to be able to think in both gears. Things go down just as much as they go up, if not more.
Coming in 2020, Rebel Trading Group Academy.
The paid subscription service model.
A paid in-person school.
Anyway, I'm long banks. I think that in a recession, they're going to get hit hard, but coming out of the recession, I think that they're going to do significantly better. As the economy booms and cheap money is being made.
Dude, I'm ready to buy Bank of America at like $9.
You know, in the recession, that bitch got down to $4. She was like trading, like every day it was like $4, $6, $7, $3.50, $2.90, $8.40, $6.60. Just all over the place.
What is happening?
Yeah, the too big to fail thing, real quick, before we wrap it up. The too big to fail thing, it definitely resonates with me because we should have totally let that system crash. We should have let all those banks that got greedy, we should have let them get hit hard. Believe it or not, Goldman Sachs didn't get hit that hard. Morgan Stanley didn't necessarily get hit that hard, but Bank of America, Wells Fargo got absolutely slaughtered. But they got bailed out by the federal government. Only Bear Stearns and Lehman Brothers were left to fail because they were the ones that allowed the crisis to happen. They were the ones that created the mortgage-backed security. So they were allowed to fail, and everyone else got bailed out. So I like investing in the corruption. I hate banks, and what do they say? Like, keep your friends close and your enemies closer. That kind of thing. Like, I hate banks. I hate everything that they stand for. But I want to be a bank.
You like that side? I get it.
You got anything you watching this week?
Are vehemently against financials.
Oh, yeah. Well, what would be the argument for that? Why would you be behemothly against
the same reasons like you hate it? I mean, the
corruption and
yeah.
Yeah, you hear Wells Fargo created like some 2 million fake accounts in order to embezzle money, and
yeah.
Apparently Apple's going to Supreme Court. Apparently someone is suing, saying that they have a monopoly on their app store because app developers are stuck in selling at their price models, and there's no third-party app store allowed on the Apple network. And somehow that made its way to the Supreme Court.
Monopolistic. That's interesting. Is that recent news?
I heard it this morning. Technically last night on a podcast I listened to this morning.
God damn, the Dow was up 600 points today.
Yeah, it was a nice day, and I'd like to see it do it again. That big, corrupt, big, bad Federal Reserve that I know to hate so much is being nice and transparent and letting us know when these rates are going to go up and down and what their plans are. They basically came out and said, we're probably going to leave them unchanged for a little while. Like, that's more or less what he said. They're being very transparent, and we've never had that in Federal Reserve history.
Yeah. But that's nice, though. I mean, okay, so, you say it's a private entity, right?
Mm-hmm.
Let's go back to this. It's a private entity, but the chair, they're appointed by the president.
It's very true. Very fucking true.
And we heard some tweets from Donald Trump saying that he's upset with Powell's decision to increase rates.
Mm-hmm. And he handpicked them.
Yeah.
Absolutely. Yeah, he said that if the Federal Reserve raises rates, it will destroy everything we've worked so hard for coming out of the recession. And it's possible. I mean, he might be right a little bit.
I like that. I like that.
It's true.
I like that Donald Trump said that.
I think that the Fed got. I think that they cranked him up tight quickly, but if they leave it alone, then I think that they're doing things pretty right. I'm no economic expert. I mean, we're two guys that have no idea how Wall Street works, right? So, I mean, I could be completely wrong, but if they cranked him up 2-3 times, if they can leave it alone for a little while, see what happens, see where we go, they might just find that sweet spot. And if they find that sweet spot, Nathan, I think our bull market is going to continue. We're still technically in that bull market, baby. We're still technically in it.
All right. Well, so are you holding it, or what are you doing with it? Are you buying calls on it? How would you cover calls?
I don't
on
know.
XLF?
I don't know if I would do calls. I think it would just be a good 6.5% of my portfolio. I feel like that's a good, strong balance. I'm more excited about Berkshire than any other stock in there, to be honest.
Mm-hmm.
So, yeah.
Yeah, me too. I would load up on the dips. That's what I would do.
What are you watching this week, Mr. Nathan?
Well, I figure since we're on financials, I do a triple leverage fund. I'm watching FAS. FAS is one of the more popular. It's one of the more popular triple leverage ETFs. I think the most popular is the triple leverage NASDAQ, the TQQQ.
Mm-hmm.
This one is the 3X Financials, FAS.
And are you watching that just because we're doing a financials episode?
That, and I just want to see how they rally out of this market.
Mm-hmm.
If it's a rally, or let's fucking tip it over, baby. Let's do it. Let's start now.
Well, they've struggled this year,
Yeah.
They've struggled, so I'm wondering what that was all about, because it had to be because of the rates. It had to be fear of defaults, fear of credit risks, all that shit.
But when the Fed raises rates, I don't know.
Well, in theory, because
the consumer just got scared and then sold off a bunch of financial stocks.
What I think it was, if I had to guess, the Federal Reserve says we're going to raise rates, which means that the banks are also going to raise rates. They're going to make more interest on the money that they loaned out, right? So, that being said, I think a lot of stock got sold off because the investor of the stock believed that the rising interest rates would cause more defaults on credit cards, mortgages, auto loans, business loans, etc. So I think it was sold off out of fear of defaults, because defaults will go up in a rising interest rate environment.
From the investor.
Say again?
Fear from the investor.
I think that's what it was. I don't think it was the numbers talking. I think it was the investors talking. So that, and once again, that being said, that could set up a buying opportunity in the XLF or banking sector.
Jason, what happens when we all say, I need my money out of the bank?
We have the Great Depression again.
Let's do it. Everybody make a run.
Yeah.
We're gonna get
Are you
charged,
familiar
right?
with the fractional reserve banking system? So let's say the Federal Reserve, I'm going to make easy numbers here. They loan $1 million. It would be more in the tens of billions, but let's just say it's $1 million, right?
Yeah.
And I loan it to you, Bank of Nathan. Bank of Oliphant.
Bond.
Boo. Bank of Nathan Oliphant.
Boo.
Bono. So I give Bono $1 million because I'm the Fed. You only have to keep 10% of that money in your personal reserves, and you can loan out 90% of that. So that means that if I give you $1 million, you have to keep $100,000 and you can loan out $900,000. That means the next bank only has to have $90,000 in their account and they can loan out $810,000, so on and so forth. So almost out of thin air, it kind of creates more and more money. And money isn't always printed. Sometimes it's just adding a couple digits. Just adding a 0 or 2.
Like a denomination?
Yeah, exactly.
Down? Or what do they call that? What was it? China just did it. Venezuela just did it.
Inflation. That's what inflation is. High printing, high creation of fiat currency. It's inflation. It makes it easier to get dollars. So therefore your dollar becomes worthless. It's because it's easier to get, it's not worth as much. Think of the same thing as with let's do diamonds. If diamonds go down in price, they're easier to get. They're not worth as much. Everyone has diamonds, it's not worth as much. Same goes the opposite way. If they take diamonds out of the system, they're harder to get. It costs more money. It's the same with dollars. If they start deleting some of those numbers, it makes the dollar harder to get. Deflation. They start printing more. The dollar is easier to get. $20 is now worth $40, or $40 is $20. That kind of thing.
Yeah. Think
of how in 1910 a Coca-Cola cost 10 cents. You go to Cracker Barrel, you see the old signs. Get a ice cold Coca-Cola, 10 cents. This old sign, that they have all over the walls and shit. That's because they kept printing and money and shit. Coca-Cola, dude, if I go to the gas station right over here, it's going to be at least $1.99 for a 20 ounce. And it's all inflation. It's inflationary practices. It's the Fed printing money. And I hate to say it because I'm such a conspiracy theorist. I think the Federal Reserve is getting more transparent and more responsible. I hate to fucking say it, Nathan. I think the government is getting less corrupt.
Do you like that?
I love that. I think I'm seeing more freedoms from the financial world happening. And I'm wondering if that's just because of Republicans in office. We started investing in a democratic world. Oh, fuck. One more. God, it's a long cast. We're going over, but I'm enjoying this, man. I'm enjoying this. Going back to the market news. The elections happened.
Yeah.
The House won, didn't they? Or the Democrats won the House?
Barely, though. Barely.
They barely won, but a W is a W. If Alabama barely beats Auburn, it's 33-31, still a W, baby.
Okay. No, it's not, because if it was a huge landslide swap, then we would have seen more. I don't think the market really reacted that well.
I think it was priced in. I think we knew it.
Yeah. I don't know.
Well, since you're watching FAS, triple leverage. Now that's a bull fund, right?
Yeah, it's a triple.
What's the inverse to that, FAS?
I want to say slow, but I don't know.
I'm gonna have to look it up while I'm talking.
I'll do it right now.
You know what I'm watching? I'm finally watching oil. I think if you go back to 48 or 49, I talked about if USO got below 12, I would be excited. Well, here she is at 1080, and I guess I gotta start putting my money where my fucking mouth is. Oil has just been selling off and off and off, and it's just on the ugliest decline, dude. Just who the hell wants to be in the oil sector right now?
FAZ is the ticker symbol for the bear.
Oh, so it's fast and Faz.
Yeah.
Okay. Yeah, we're at 1064. 1064 on USO. The oil ETF holds near month New York Mercantile Exchange futures contracts on WTI crude oil. This is the USO ETF. And Man, dude. Just been hammered down. Look at the month. 26% in 3 months. Oh my goodness. We're talking about oil. We're talking about a commodity-backed asset here. We're not talking about Apple or Nvidia. We're talking about a commodity that's used by hundreds of millions. No. It's used by billions of people every single day. And it slid 26 and almost 27%. I think it might start being time to load up. But as I start to learn to be a more patient investor, I'm seeing that we are still in a downtrend. This isn't the bottom at 1064. It's still trending downwards. Therefore, I think this isn't a bad price to get some, but be ready to buy more.
I'm ready, dude. Let's do it. That should be our next biggest move.
Or if you really want to have fun with it, buy some here and buy a put. That way you've got a little bit to the upside, but it really protects your downside. I don't know. It's just, I'm looking at this chart and it's just trending downwards, but I can't help to think that oil is going to, like, how low can oil go? It's at $50 a barrel now. Can we see 44? Can we see 36? I don't know, man. I don't know.
What does that mean for gas prices? That means gas prices are going to go down.
Dude, it's at 216 here.
Jesus.
It's at 216. So.
That's exciting.
USO, FAS. Is there anything else you want to say to these people?
Thanks for tuning in. Thanks for sticking with us.
Thanks for listening to us ramble. This is financials, baby.
Where can they add us?
They can add us at Rebel Trading Group with 2 G's. That's rebeltradinggroup@gmail.com. We are on SoundCloud. We are on YouTube. We have a full archive. All 50 videos are all on YouTube. All of our podcasts we ever done. We are also on Facebook. We are on. I haven't uploaded to SoundCloud lately because all of our files have been videos. So we'll get back on the SoundCloud. We're on SoundCloud. And, we're on StockTwits. That's one of my favorite places to go. Just kind of see what people are talking about. Get at us. Get involved in us. Dude, if you want to be on the fucking show, email us. I don't care. Let's get a discussion. I want to talk. I want to hear some trading strategies.
Make us look like idiots.
Yeah. What are you thinking? Do you like us? Do you hate us? Do you want to short us? Let's discussion. Let's argue. Let's agree. Let's
fight us. We'll fight you.
Yeah. Let's do all of it. Tell us why we're wrong. Tell us why we're right. Tell us what we need to be doing differently. We'll tell you what you need to be doing differently. Get involved. Let's do it, man. We're all here. We're trying to make money, Nathan. I'm trying to help these ass clowns make some money.
Ass clowns. Don't call our viewers ass clowns.
That's true. That was kind of an Iron Man quote when he was like, I'm trying to play ball with these ass clowns. Talking about the government.
That's rude.
So, you can get at us. And if you have an idea for a logo, send it in to us. There just might be some money involved.
Yeah.
Something nice, something that encapsulates the rebel trading mantra about fighting against banks and taking in the money and fighting for our own freedom and using these assets and financial markets in order to not have to fucking do the things that we don't want to do. I don't want to clock in and look at fluorescent lights anymore, Nathan. I don't want to do it. I want people on my team taking over these banks, making some money, baby.
Let's make that bread.
So if you can find a logo or you can design something that looks good, I can put it on a polo, I can put it on a shirt, I can put it on a sticker on a car. If it looks like something that we can litter North America with, fucking send it to me. And if I like it, I'm going to buy it from you. Send it to us.
I'm going to put that on a shirt. Litter North America with it.
Litter North America with it. We are launching a full-scale invasion on North American banking systems, and we're taking over, baby. So,
if you got a job at a bank, would you take it?
Maybe if it was doing something I like. I mean, to be honest, are we not little bankers ourselves, trying to see where we can allocate money properly and make proper interest rates and, try to make proper financial decisions using nothing but money as your business model? Are we not little bankers in ourselves? So
I guess.
I think
with life.
I think I would be fantastic at selling banking products. I think I could sell annuities and fucking CDs and mortgage loans. I think I could sell that shit very well. I think I could sell. I'm a salesman, baby. That's the one job that I should have done that never have. Is something in sales and selling investment products or debt products. I would be great.
All right, well, let's wrap this up.
Let's wrap it up, baby. Episode 51. Go be a goddamn rebel. And maybe we'll see this week again. Are you busy at all?
I could probably do it tomorrow. I can't do tomorrow.
Can't do tomorrow? No worries. We'll see. If not, we'll do it again next Wednesday, my dudes.
Yeah, man.
I love you. We'll get back in the swing of things. 51 over, on to the next 50. Hard push to 100. And we're gonna find out about that crosscast, right? Couch crosscast.
Yeah, couch talk crosscast.
Couch crosscast.
Couch talk.
We'll talk offline, but that would be fun. That would be fun to do together. But we'll talk offline about that one. Yeah. All right, man. Well, let's wrap this up. Episode 51. I love you. Financials.
Shut up and sit down.